Bitcoin has kind of drifted a little bit, but look at where it's come to. So it's right on top of where the NASDAQ is on a drawdown from the all-time high. So this is really interesting. As you look at this chart, you can see that Bitcoin had a very nice run from the creation of those ETFs. It got to that all-time high, but since then it's been consolidating, and this has been healthy to me. It's been super healthy. We have to debase the currency in order to keep up with it. So you need nominal GDP to go higher because of inflation, which means that inflation is causing your bonds to not be worth as much on their yield, which means that you're getting a negative real yield. And once investors clue into this and those yields are not high enough on those bonds for them to store their value, they will turn to Bitcoin eventually. And when that happens, well, then it becomes a 2, 3, 4, 5% allocation or even more.
Bitcoin has long been at the forefront of risk assets. Lavish highlights how Bitcoin has benefited from the inflow of capital into risk assets, riding the wave of risk asset inflation. The asset's inherent volatility, which can be daunting for some, has also been a source of significant gains during bullish phases. Over the past year, Bitcoin has seen a remarkable run, driven in part by the introduction of Bitcoin ETF, which have provided a new gateway for institutional investment. This influx of capital has not only bolstered Bitcoin's price, but also started to shift the perception of Bitcoin from a speculative asset to a more established component of diversified portfolios. Lavish notes that while Bitcoin's recent performance has been impressive, we are still in the early stages of institutional adoption. Institutions are gradually becoming more comfortable with Bitcoin, but this is a process that requires time, education, and a deep understanding of the asset's unique characteristics. The potential for Bitcoin to be integrated into institutional portfolios as a distinct allocation is a significant milestone. This shift is not just about recognizing Bitcoin's performance, but also about understanding its role as a hedge against traditional financial systems and its potential as a long-term store of value. Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
Bitcoin has been, for a long time, it's been the tip of the risk spear, right? So it has benefited from risk asset inflation. And so as risk assets, as more money have come into risk assets, it's gone into Bitcoin as well. And Bitcoin being a super volatile asset, it's done well on the volatility to the upside. But remember, Bitcoin has had a tremendous run over the last year, this year in particular, because of the injection of capital coming through ETFs, and that's been a great development for Bitcoin. And I believe that it's going to spur more institutional investors to do their homework, learn about the asset, see why it's different, and have a true understanding of it, and then add it to their portfolios in a separate allocation. And that's really the progression that we're looking for here. We're not there yet. It's taking institutions a long time to get comfortable with this asset. However, if you look at this chart, you can see that along the way throughout the last, over the last, I'd say 9, 11 months, you can see the orange line shows you where that Bitcoin drawdown has been from the all-time high, whereas where the NASDAQ is, and they're right on top of each other. So Bitcoin did have a drawdown over this last number of weeks, but that has to do a lot with what's been going on in this election. You had a nice run up, tried to get through the all-time highs again. It looked like Trump was going to be like just sweep. It looked like he was going to win a landslide a month ago, and right when he almost got assassinated, you could see Bitcoin jump back up. But then, as this whole thing is played out, Bitcoin has kind of drifted a little bit. But look at where it's come to. So it's right on top of where the NASDAQ is on a drawdown from the all-time high. So this is really interesting. As you look at this chart, you can see that Bitcoin had a very nice run from the creation of those ETFs. It got to that all-time high, but since then it's been consolidating, and this has been healthy to me. It's been super healthy. If you remember, Michelle, the last time we saw Bitcoin actually act as a risk-off asset was when people's money was being threatened. And that was back in the Silicon Valley bank disaster. So
Right.
during that disaster, and when that looked like it was going bankrupt, and it ultimately did, Bitcoin rallied, and Bitcoin did well during that time. And that's because people they woke up and said, oh my gosh, my money is not safe in the bank. Well, of course, the Fed came in and said, yeah, it's safe. Don't worry. We're going to come up with these acronyms for these bailout programs, and your money's going to be safe here. So don't panic about that. So Bitcoin kind of went back to where it is, and people haven't had to learn about it yet. What we're looking for is some sort of disruption in the market that is like that forces Bitcoin to be the risk-off asset. It's not there yet, but I believe as we get more institutions understanding and allocating to it in their portfolios, it will get to a size that it will be a store of value, a true store of value with lower volatility. It's just natural, as it's only a $1 trillion asset right now. If you look at the overall assets in the entire world, the investable assets in the world, you're up at about $900 trillion worth of investable assets. Bitcoin's just a fraction of that. It's like 0.15%. If you get 1% of those investable assets, Bitcoin's going to be trading over $400,000. And so that's the point, is that once it's there and you have $9 trillion, $10 trillion in that asset, it becomes a place where investors can feel comfortable and they can be confident that it's a long-term store of value. And that, Michelle, is when we start seeing allocations out of other asset classes, not just it being allocated as an asset class itself, but allocations out of things like long-term treasuries, for instance, where you're seeing that you're getting negative real rates for long-term bonds. And investors will eventually wake up and say, why am I putting my money in a 20, 30-year treasury that, if you look at inflation, and inflation will be high over the course of the next couple of decades, or at least the next decade, because of the deficits we're running, because of the amount of debt that we have, there's no choice. We have to run negative real rates. That's just reality. We have to debase the currency in order to keep up with it. So you need nominal GDP to go higher because of inflation, which means that inflation is causing your bonds to not be worth as much on their yield, which means that you're getting a negative real yield. And once investors clue into this and those yields are not high enough on those bonds for them to store their value, they will turn to Bitcoin eventually. And when that happens, well, then it becomes a 2, 3, 4, 5% allocation or even more.
Lavish outlines the economic necessity of maintaining high inflation rates to manage the overwhelming debt burden. This environment of persistent inflation erodes the real yields on traditional bonds, making them less attractive to investors. As more investors realize this, Lavish predicts a gradual shift towards assets like Bitcoin that offer a hedge against inflation and preserve value over the long term. This transition could lead to a significant reallocation of capital from traditional assets like bonds into Bitcoin. Lavish paints a stark picture of the future if the current fiscal trajectory continues. With national debt growing exponentially and the government spending more on interest payments than on essential services like defense, the situation is becoming increasingly untenable. In such a scenario, the likelihood of continued money printing and currency debasement is high. For investors, this environment makes traditional safe haven assets like long-term treasuries less appealing, opening the door for Bitcoin to play a more prominent role in preserving wealth.
I mean, we just crossed, Michelle, we just crossed $35 trillion of national debt. I mean, it is a dubious honor for us. We just keep piling more and more and more and more and more debt on the bill. Those massive deficits they're forcing this to grow exponentially. And so what we have what we have is $35 trillion of debt, and something that nobody talks about, well, a few people talk about, is $215 trillion of unfunded liabilities, the vast majority of that in Social Security, Medicare, and Medicaid. And so this is the ultimate Ponzi scheme now, because by the time I retire, that fund is depleted. And so I might get 60 or 70 cents on the dollar as it stands now. The only way that can be avoided is by either raising the taxes on future pay-ins or cutting my benefits. That's the only way we can reconcile this. The only third way we can do it is just print more money and ensure that there's tons of inflation, and somehow fill that gap with another program, another acronym. I'm sure that they'll have interns dreaming this up for years. So, but the reality is there's going to be more printing, because if you're a politician, you want to get reelected. And it's political suicide to cut benefits. So they're not going to do that. Neither party will do that. So it means that they've got to fill that hole somehow. And that's a massive hole. We're talking about $250, $260 trillion of total debt that this country, that we don't have the money to pay for. If you add all this up, it's kind of like somebody who's got $100,000 salary, but over $5 million of debt. It doesn't add up. You're essentially bankrupt. My thesis on this is that there is no way that we can get through this period of the next 10 or 20 years of super low inflation. We have to have inflation. If we do have an AI productivity miracle, it's not coming in the next 2 to 5 years. It might come 5, 7, 10 years, and that will help. But when you're spending money and you're not creating real productivity, it's a problem. We could have used trillions of those dollars and built nuclear power plants across the country and had an energy boom here, but we didn't do that. We've been spending money on green energy that has shown to be problematic at best, and even with all the subsidies, it's not profitable. So that's been a problem. You need real productivity, and so we could see an AI productivity miracle, and that could help. But on the flip side of that, we need spending to get GDP higher to pay down this debt somehow, because it's just growing out of control. So when you get to the point of where we are today, where we're spending more money on interest per year, over $1 trillion on interest per year, than we are even on our military, which is about $850 billion that we know of, that's just insanity. And so you have to fill that gap with something. And that something is monetizing the debt, especially if we see a downturn here. There's no way around it. We're going to have to print money unless we want to go into a period of massive turmoil and a total reset of our economy. And that would be, I think, too painful for any politician and to allow the Fed to really do.
James Lavish's analysis provides a compelling case for Bitcoin as more than just a speculative asset. As the global economic landscape evolves, driven by unprecedented levels of debt and fiscal irresponsibility, Bitcoin stands out as a potential hedge against the vulnerabilities of the traditional financial system. While the road to widespread institutional adoption is still being paved, the factors driving Bitcoin's growth are becoming clearer for investors seeking to navigate the complexities of the modern financial world. Understanding Bitcoin's potential role is becoming increasingly important. As Lavish suggests, the future of Bitcoin is not just about its price action today, but about its growing significance in a world where traditional assets and financial systems are under increasing strain. Please like and subscribe my channel.